It's time for the Trading Stocks Made Easy podcast. Each week, Trading Stocks Made Easy demystifies stock trading and investing so you can profit big. And now, here's the host of Trading Stocks Made Easy, the wealthy investor, Tyrone Jackson.
Hey. It is Tyrone Jackson, the wealthy investor, and I see you're back. You just can't get enough of this Trading Stocks Made Easy thing, can you? Well, I can't blame you. Hey, listen, welcome to today's show, and today we're going to talk about money as a service. Money as a service. Now, when you think of money management, the industry has us thinking that we're really not smart enough to handle our own money. Do you realize that? So this whole idea of paying someone else to manage your money, there's nothing wrong with that. But you should probably be supremely busy doing other things in your life if you're going to be charged for someone else to handle your money. So a lot of people have difficulty with understanding this process of money as a service. So let me break it down for you. You realize you can wash your car on your own, or you could take it to a service, right? To wash your car from home, all you really need is a bucket of soap, a sponge, and some water. And of course, some sort of detergent to wash your car down. Well, why do people go to car washes? Well, because it saves time. It definitely doesn't save money, but it saves time. So you'd rather have the machine do it. You'd rather pull up at the car wash and have the guy say, move the car forward. They soap it up for you. It's rinsed. It's dry. It's not really dry, but you know what I mean. And then you are through the whole process in about 6 minutes. Done. How much is the average car wash these days nationwide? Well, I'm going to go out on a limb and say about $35, depending upon your city. So car washes are services, but you could actually stay home and wash your car yourself. Agreed? Agreed. How about your taxes? Now, a lot of people use tax programming software. Why? Because you just plug in the numbers and you sit there, and it maybe takes you about 45 minutes. And if you need to call tech support, you can do that. The point is, you can do your taxes at home and save yourself money, or you can take it to a tax preparer of some kind. Now, this gets a little tricky with money as a service because if you owned an investment property or your home, or you may be entitled to a series of credits under the tax law like college income tax credit, itemized deductions, so on and so forth. So you really want an individual who has experience plugging in these numbers and making sure that you qualify for all these deductions. You're really paying for their expertise. But if you're a single person and you have no investment income, you can plunk all these numbers in the U.S. on the IRS Form 1040 Easy and be done in about 35 minutes. But money is still involved as a service to track the money that you've earned and to calculate your taxable income. Money as a service, right? Well, how about cutting your grass? Now, you know that there are kids throughout the neighborhood, no matter where you live. If you have a lawn, there's somebody who can come and do it for you on a weekly basis for about $50. Can you get a lawnmower and a riding mower and get out there and put the time and energy into your lawn yourself? Of course you can. But for some people and their lifestyle, it's better to pay someone to use a service. Well, you see these three illustrations of services? Well, the same thing happens in the financial world. So what most middle-class people do who are busy working is they get something called a financial advisor, someone who they assume is a little bit more educated about money matters and making your money grow, so they sit down with a financial advisor. Now, there's nothing wrong with having a financial advisor because most of them are very charming people. They're warm, they have access to software, they have nice offices, and you can go and sit down with them about things like retirement planning. So what that means is you're going to turn over a certain percentage of your paycheck every single week or every single month to your financial advisor, and they're going to put that money somewhere so that it works for you. And one of the first things that a really good financial advisor is going to ask you about is your risk. Do you want to be in high-risk investments or low-risk investments? They always try to get you to look towards retirement. Now, there's a reason for that. A, they want you to feel financially secure. But when your financial advisor talks to you about retirement, they know that they have years of deposits coming in, and for every deposit, the firm that the financial advisor works for collects a fee. So if you're in the business of collecting fees for financial advice, that can be pretty lucrative once you build up your clients to about 100 or more. Now, let me stop here for a moment because I'm speaking to you as an educator and a stock market trader and investor. I don't think there's anything wrong with having a financial advisor as long as you are aware that you are paying a fee to sit down with that person and for their expertise. But if you start to look at what you're paying in fees, every single time you make a deposit, they start to add up. And a lot of people say, when you look at those fees and you dissect what they are, that your ignorance, the fact that you don't know about how to handle money, is very expensive. So it's not about insulting anybody or putting anyone down. I'm just pointing out to you, if you have a financial advisor, you are paying fees. Now let's talk about where those fees come from and where they go. Well, the reason that your financial advisor focuses on retirement is because, as I just said, the fee structure is going to be years and years and years and years. Great opportunity. So what they typically try to do is they get you from focusing on your retirement to then maybe some other funds that cover your assets, to then maybe money for your kids, and then bequeathment, leaving money to other people. So they kind of move you up this ladder. Why? Well, the financial advisor gets a fee from the funds that you choose. So when you say, I'll take a look at that fund because that mimics the S&P or the Dow Jones Industrial Average, I don't know anything about stocks, but I'd rather have a fund that mimics the S&P or the Dow Jones Industrial Average, I'll take that. And one of the ways in which your financial advisor builds confidence is they're going to show you a series of pictures. Hey, look at these 5 funds, and look at how this one has performed over the last 5 years, and this one, and this one. And they always throw something in about the Depression, and if you had been buying since the Depression, look at how rich you would be over an extended period of time. And that's because most people who think they're not good at money, right, they rely on pictures to persuade them because they're like, staring at data and charts, I'm not good at that. In fact, I wasn't good at math in school, so just show me pictures and I'll take the picture of the thing that has gone up the fastest over the last 5 to 10 years. Yeah, pictures. And your financial advisor goes, yeah, great choice. Now, here's the truth. Every single chart they put in front of you, they get a fee when you make a deposit. That fee may only be about 1 to 1.5% of your deposit, but they're going to say to you, don't worry about that over time because, yeah, you pay fees, but look at the performance of the fund. Now, the other thing that they don't tell you is that when you go to withdraw money, there's a fee for that. And even if you never withdraw for a 5-year period, there's another fee called a management fee, which is assessed once or twice a year on every single fund. Now, again, I want to be clear. This is not about putting down anyone who's a financial advisor. What I want you to do is to be an educated consumer and add up all of the fees that you are paying on a monthly or annual basis. Why is that important? Because that's really taking away from the dollars that you have invested. So if you're paying someone else to manage your money or to educate you about money, it is costing you a lot of money, maybe not in the first year, but over a 5 to 10 year period. So now let's look at this. Of the money that you're putting away, usually in a mutual fund being directed by your financial advisor, how much money is that investment kicking off on a monthly basis to you? The answer, I'm sure, is 0. Because when people are putting their money into funds, index funds, for example, they're not getting any spendable cash that they can get back right now on a monthly basis if they ever need it. So because ignorance is expensive, right, you're spending a lot of money right now on a financial advisor and fees being generated by a fund, so not all of the money that you actually put in the fund is actually working for you, and you have no cash coming back to you right now. Now, I bring this up because in my world of stock market trading and investing, we're always producing monthly residual income so that if we need it, we have access to $1,000, $2,000, $3,000, $4,000, $5,000 a month coming in every single month. So therefore, you have kind of like access to capital constantly because you're learning how to trade and invest in the stock market. The wealthy investor approach to the stock market is designed so there's always residual income coming in. Even if it's $400, $500, $600 a month, there's always income being kicked off by your investment. And the only fees that you pay are the fees for buying, selling the stock, and maybe cover call writing. So as an educated consumer, what am I asking you to do this week? Just think about your long and short-term financial plan for yourself. And if you have a financial advisor who you love and trust, take some time in the next 4 days and add up all of your fees. They're in your statement. The fact that you are not handling your money yourself is actually costing you money. Nothing wrong with that, just like the guy who cuts your grass, but you should be aware of the thousands of dollars that you're paying in fees. So don't think because you have one person you can call who has a nice voice and a wonderful office and who's always happy to hear from you. Don't think you're not spending money. You're definitely spending money on that. Your job is to find out how much is actually going out on an annual basis so you can make an educated decision. That's part of how money works as a service. Back in a moment.
Want to increase your stock market trading profits? Then you need to start your monthly membership to WITradeschool.com right now. Don't understand how to write covered calls for monthly income? No problem. Simply review Tyrone's latest stock trades in our video library as many times as you need. WITradeschool.com is all about helping you get the financial education you need to earn money in the stock market and change your financial life. Tyrone Jackson, the wealthy investor, has helped his students earn thousands of dollars per month trading stocks online from home. These are people just like you. So what are you waiting for? Follow Tyrone Jackson's red-hot stock trades and investment strategies today. Don't wait. Start your monthly membership at WITradeschool.com right now.
We're talking about this idea of money as a service. Now, I've talked about this next topic, which is mutual funds, multiple times for years and years over the life of the show. But I want to point this out to you. A mutual fund is nothing but a basket of stocks that you let someone else choose for you. Now, we've moved past your financial advisor, right? Because who are you trusting with your money when you put your money in a mutual fund? You're trusting a mutual fund manager. Now, check this out, because this is always the most interesting thing in the world to me. You probably don't even know this person's name. You don't know where they live. You don't know how long they've been managing money. But yet you're dumping money year after year after year into this fund. And you're saying, okay, Mr. or Mrs., I've never met you. I hope you know what you're doing. And they're buying shares in these various funds for you. So now you're trusting people, money as a service, who you've never even met and probably will never even get to know personally in a room with your thousands or hundreds or even millions of dollars. Why do people do that? Well, money as a service, the industry, the financial industry, spends billions of dollars in ads and things like the Super Bowl and the World Series to convince us to use them as a service rather than us getting educated and handling our money ourselves. There's nothing wrong with that. There are all kinds of services. You can clean your house or have someone come over and do it for you, but you're going to pay a fee. You can handle your money yourself or have someone do it, but you're going to pay a fee, and sometimes you're paying fees to people you'll never meet in this lifetime. I am huge on choice. Right? If you live in the United States, we're so fortunate to live in a country where we have a lot of choices. But here's the trend that I see going on right now in the world marketplace. There are companies that now will deliver your food to you wherever you are, and you never have to go to your favorite restaurant to pick it up. Have you seen the fees that they charge? It's not just a straight-up delivery fee. If you're ordering out 3 times a week, I want you to pay attention to the pickup fees that they've added and the service fees that are on top of what you ordered. They're getting to be very voluminous. When you don't want to shop at the supermarket and you want to order your groceries, have you noticed the fee, the cost for doing that? I have, because that's how publicly traded companies make billions of dollars now from all of this convenience. As many of you know, I have 2 daughters, right? And they're both now in college. But they love existing in the new world order using apps. And I recently had a discussion with them about all the fees that they're paying every time their food is delivered or they go to get their favorite cup of coffee and they want it waiting for them when they actually arrive. There's a fee for that. So as the consumer, unless you're aware, you're going to wind up paying hundreds of dollars a month in convenience fees that could be going into the stock market. Now, again, one of the things I love about America is that in this country we have choice. Choose to be smart about your money and pay attention to all of the money that's walking out of the door that could be going directly into your TD Ameritrade, Charles Schwab, or E-Trade account. Don't spend your wealth on things that do not bring money back to you, or at least cut down on flagrant spending because, well, it's only $5 here or $7 here or $9. All of those fees add up, which leads me to my final point. Your intentions. If your intentions are to have financial freedom in your life, you want to take actions on a weekly and daily basis that are consistent with your desire for financial freedom. That means you, in effect, want to plug leaks. You want to plug holes in areas where you are engaging in excess spending. So, it's not that I'm greedy or cheap in my personal life. I just pay attention. So I don't like all these banking fees from all this banking online. I actually still go to the bank to cash checks. I happen to like going to the grocery store as long as I can set a time limit. I'm going to be in and out of here in 20 minutes. You know why? Because if I actually go to the grocery store, pick up my grocery, there's no fees attached to that. I actually like, when I order out, going and actually picking up the food. Why? It saves $7. Now, that doesn't seem like a lot until you add up the fact that you may do that 10 times in a month. So really, it's all about being aware of your spending and your spending habits. In America, you can spend your money anywhere you want. I just want to make sure that a significant amount of money that's coming into your household every single month is going towards wealth building with less fees. Financial awareness is a habit. Wealth is a series of positive habits. When you dial down the habits that don't make you money and you dial up those that do, you have a shot at financial freedom and independence. Learn how to handle your own money. Get the financial education that they should have given us in high school, college, and grad school. But since they don't, we wind up spending our money on things that are a waste of money, not just a service, instead of investing in ourselves. Hey, this is Tyrone Jackson, the Wealthy Investor. Something to think about as you move forward, because your financial consciousness determines your financial outcome. And I'm in favor of you having more residual income on a monthly basis in case you need it, so that you can enjoy and have the life you were born and meant to have. I'll see you next week right here on Trading Stocks Made Easy.
You've been listening to the Trading Stocks Made Easy podcast. Be sure to rate and review our show on iTunes. While you're on iTunes, be sure to click the subscribe button and you'll automatically receive our next episode.